Lisa is, of course, the co-anchor of Bloomberg Surveillance on Bloomberg Television. Abeer Omar also joins us. She's a Middle East correspondent for Bloomberg, based in Dubai, keeping an eye on that OPEC Plus meeting. Lisa, let me go to you first. So you have all of these executives kind of flying in from around the world. As we said at the top of the show, front of mind is this conflict in the Middle East, how long it's going to last and the fallout from it. Give us a vibe check first, if you could, on the beaches of Rio. What are these executives saying about the state of their industry today and the prospects for it here in the months ahead?
Honestly, surprised that it hasn't been actually worse. They've seen demand really holding in, accelerating into the summer. Summer is expected to be incredibly busy. They talk about how there's been resilience in terms of demand, even as they've increased prices to offset higher fuel costs. It's been almost surprising resilience. And this, to me, is sort of the heart of the issue. And David, we've experienced this across the board economically. Why hasn't it been as painful as people said it would, right? People said if it dragged on this long, it would be a real problem. We talk about the potential for people to pull back because costs are getting higher. They're not doing that. In fact, you're seeing people just invest even more in premium travel because that is where a lot of the demand is coming. And when I ask people, is it just coming from the well-heeled travelers, the K-shaped economy? They say no, it's throughout the entire cabin. So here's my question. Ultimately, is this a structural change post-pandemic? We all just want to travel more, experience more, and we're willing to pay more for that than, say, investing in our homes or physical things? Or is this really indicating the resilience of the overall economy, and not just in the U.S., but globally, regardless of what some of the naysayers have been talking about, and speaks to potentially the other side of the coin, which is the inflationary input and the reason why it can be so sticky?
I also want to ask you, you alluded to this a little bit, but at the start of the conflict, we were warned, in Europe especially, that they were running out of jet fuel, right? This was an impending, really bad situation, and then it kind of didn't happen. This week, Air Canada and Lufthansa said, essentially, we're good, book your vacation, don't worry about it. What happened there?
You know, this to me was one of the big discussion points at the beginning of the conflict was we would run out of oil, that jet fuel was going to dry up, and suddenly a transatlantic flight was going to be stranded over in Britain, unable to get back to the United States. And none of that has happened. In fact, when you talk to so many different executives, they all say that's not going to happen. We're not close to running out of jet fuel. When you say what happened, I mean, there was a great story this morning on the Bloomberg talking about how a lot of the supply coming from the U.S. has just really plugged the gap. And you've also seen a real pullback in demand, or at least in usage, when it comes to certain Asian economies. And that has offset some of the depletion that we've seen in terms of the total supplies. Either way, it doesn't seem to be that kind of top of mind moment. When I ask different executives here, are we close to that moment? Do you just have to wait a couple of months? They kind of shoo me off. They're like, stop it with that. We're not going to run out of jet fuel. It really is an issue. It is just really an issue of financial management at this point.
Stop it with that. All right. You know, if we rise the undulations of all of this, the volatility in oil prices and fuel prices and gas prices, we have the president weighing in on this as well. Of course, he's faced a lot of blowback here domestically because prices have continued to rise higher and higher as this conflict has continued. Let's take a listen to what he had to say on Friday about the cost of fuel.
But I will say, people thought it was going to be a lot worse. You know, today I looked at $96 a barrel. People thought that was going to be $300 a barrel. And in the meantime, we're having great success with Iran.
Great success with Iran there at the end. We can talk about that later in the show, the degree to which that's true. But Abeer, let me turn to you as we see this meeting getting underway, these OPEC Plus nations meeting, thinking about the cost of oil, thinking about their production targets. Of course, oil, a global market here. The president, I think, rightfully sore over the fact that, you know, the U.S. produces so much and yet is certainly has to deal with the fact that this is a global price. What can we expect out of this meeting today? Often these meetings are short, virtual. We want more than we get out of them. What are you expecting to see today?
Good morning. So look, I mean, we don't hear on the details until at least a few hours after the meetings take place. But this one is particularly special because it's the first one that is happening with the UAE not being a part of it. Now, the United Arab Emirates did leave the OPEC Plus alliance in a surprise move last month because it wanted to achieve its own supply goals, right? What we know about the UAE is that it was producing about 3.8 million barrels in 2018. It wants to take up those goals to about 5 million barrels. So what the OPEC alliance or what the OPEC Plus alliance has to answer for this time is not necessarily whether it could supply or not, because they do have the capacity to supply. The big question this time, and because of the war in the Middle East and the closure of the Strait of Hormuz, is whether they can deliver those oil barrels across the world, right? So what we've seen for countries like Saudi Arabia, which is the biggest producer in the region, is it was successful in sort of diverting away the oil barrels that it produces through the Red Sea and not the Strait of Hormuz. And so it's been successful at sort of getting those delivered. But again, the big question for the alliance this time around, and what really makes it different, aside from the fact that the UAE is not a part of it, is it's not as much a supply question and whether that can be achieved. It's more of how can we deliver those oil barrels physically? And so that is what we're waiting for. That is what we are expecting out of the meeting. Some delegates have told us over the past week that there is some positive news that they're expecting, especially in terms of the supply and increasing that production and production levels across the 7 members that are part of the alliance.
Abeer, you addressed the price impact of UAE and how it's going to impact the market. But UAE was one of the members of OPEC that could actually scale up. That's not the case. Some of them are already producing pretty much at capacity. But I'm wondering what the kind of the psychological impact of UAE leaving this alliance is, if you think it could have a knock-on effect for other nations, and how the Saudis are trying to hold this together.
Look, so that's a very good question, right? Because we reported as well when the UAE left that the reason for the UAE leaving was motivated by some political reasons as well. We have been hearing about the UAE wanting to leave the alliance for a few years now, but it took this time, this opportunity, when there are massive disruptions in the region, to leave it. So there could very well be a psychological sort of effect in the alliance and during this meeting that is going to take place in the next hour or so. But I guess the main thing that those countries are looking at is making sure that oil prices stay reined in. We're seeing Brent at about $90 a barrel. Now, I've been speaking to a lot of oil analysts over the past week, well, over the past 6 months or so. But the main thing that they're pointing out is, yes, on paper, oil prices are at around $90 a barrel. That is the paper price. But the actual price of those barrels could be at around $150, $160 in the market. So that is something that they're keeping an eye on. That is something that they're trying to rein in. And that is what Saudi Arabia has said it chooses to look at, also respecting the fact that the UAE will do what the UAE wants to do for its own sovereign interests.
Christina, one of the perils of working here is colleagues go to these places like Rio. Some are going to go to Evian in France in a few weeks.
We're not upset about it at all.
I'm going to see that. I'm going to be envious. It's going to make me think about my own personal travel, needing to book trips. I'm at that point. Lisa, I turn to you on this. Yes, to express my envy that you are there on the beaches of Brazil, but also to say, I think there are a lot of consumers trying to do what I'm talking about, figure out their plans for the summer, worried about prices. And I know that already you've spoken with some airline executives about this, the way that these rising prices, rising fuel prices are maybe impacting the way that consumers are looking at tickets. What have you heard thus far on the ground in Brazil?
Yeah, and David, before you get too jealous, as you can see, the beaches of Rio behind
There's somewhere.
me.
I know there's somewhere, Lisa.
Don't get too excited for 1 second. They are somewhere, but they are not at this moment where we are currently. But you're absolutely right. We are hearing from a number of different executives that, clearly they're passing prices along. And as Abeer was saying, and it's a really good point, the physical jet fuel price is very different than the paper market. So what they're having to pay is considerably higher. Take a listen. I spoke to JetBlue CEO as well as the president of Delta. Let's take a listen to what they had to say.
Is very challenging. We're passing on about 40% of the cost of fuel right now within the ticket price, which isn't great. Obviously, you want customers to really see affordable air travel, but we're seeing demand strong. We're hoping it keeps up through the summer into the end of the year.
With the 40% increase to customers, are you seeing any pushback, or are people pretty okay with it, and does demand kind of hang in there?
I think everybody understands, given the current environment where fuel prices are, that airfares are going to be a bit higher. Since 2019, before the fuel crisis, airfares, really hadn't kept up with the cost of inflation, and so there's a little bit of catch-up happening, and then you add the increased fuel price on top of things, and I think we've got to make sure that we're covering our costs.
How much have you been able to pass along the increases in price from fuel to consumers? I mean, has it been pretty easy? Have you been surprised at how little pushback you've gotten?
Our consumer is resilient. We really focus on the premium customer. And, roughly 40 to 50% of the increase in fuel costs we've been able to recapture through pricing, which really becomes about 10 to 15% on the price of a ticket. So flying is still affordable.
That was the CEO of JetBlue as well as the Delta president. As you heard there, very much resilience because, David, just like you, everybody wants to get to the beaches of Rio or incredible far-flung places where they can vacation. They're willing to pay up for it. One notable factor to me is we've gotten all these upside surprises in economic data, particularly in the United States, the labor market report on Friday in particular. All of this resilience and strength just really feeds with that. And it continues to surprise people how much the economy just keeps chugging along.
Yeah. Abeer, I know you and I were just texting. You also have a very fun vacation coming up that I will not out on television because I promised I wouldn't. Yeah. But before we let you go, I do want to ask you a non-OPEC question because CBS News and others are reporting that the U.S. Treasury Department is planning to use Iranian assets to help Gulf allies recover from this conflict. I'm wondering how that's likely to be received in the region and what assets are we talking about? Frozen funds, seized oil tankers, or is it all TBD?
Yeah, so we still don't know for sure what assets the Treasury was referring to. But look, I guess to some varying degrees, the Gulf countries, there's 6 of them, they will respond differently, right? And bear in mind that these are incredibly rich countries with so much buffers in their reserves. And so there's a question of, do they really need it? And again, I bring back the varying degrees. For example, Kuwait has suffered massive damages to the infrastructure of its main airport in an attack that happened earlier this week. So it'll be, I guess, a part of the equation will be that those countries are going to be thinking this is the U.S. solidifying that strategic partnership that it has with Gulf allies, especially that a lot of Gulf officials see this as a war that was started by the U.S. and Israel. But I guess the main question here is how will Iran see this? Because the $24 billion in frozen assets is a main concession for the Iranians. And so that we'll have to wait and see what
we're going to have to leave it there.